G'day guys, and welcome back to another live stream of the Aussie Investing Machine. Thank you so much for joining me this week again. I hope this time suits a little bit better than the schedule we had on Sunday. I certainly prefer the week time or weekday time slot. Got a bit to go through in this stream. The last stream we did, there was some really good questions and there were some companies that we saw in that last live stream, which I really wanted to take a look at. So I think the method or the setup for this live stream, what we'll do is I'll go over 3 companies pretty briefly that were raised last live stream. I'll go through some interesting points that I've found about those companies. And then once that's done, I'll go through and take all of your questions. So while I'm going through those 3 companies, don't hesitate to start asking questions. I can see them all in that live chat. So ask away. I'll get to your questions once we've been through those 3 companies. Don't worry about that. So yeah, let's get going. I hope everyone has had a good start to the new year. I'm definitely back to work this week, that's for sure. Back on the horse, as they say. Good evening, Zamazu. Thanks for joining us. Yeah, so back to work, it is what it is, but hopefully I can still keep producing just as many, if not more, videos than I have been over the past couple of weeks. I'm really enjoying doing the live stream, and I think I'll make that a weekly feature. Yeah, okay, so what I might do is I'll flip over to the slideshow and we'll start going through those 3 companies. But yeah, as I said, ask away. I'll get to your questions pretty soon. All right, let's have a look. So just put that up on screen. I'll see if I can make it full screen. Bear with me for a moment. That seems to be working all right. Yep, so here we go. The first company that was raised last time was DOU, and there was a question there, I think, from one of the subscribers, and they said, what's happening to DOU? And at the time, I wasn't up to date. So I've done some reading, found a pretty good article which has explained why they went on a trading halt. And we talked last time about the neobank Sinja, how they'd folded. And look, there's no bad news out of DOU financially, but there is some pretty interesting news about some of their directors and what's been happening with some payments. So I read this in an announcement released on the 11th, so just a couple of days ago. DOU revealed that the ASX had raised concerns over alleged breaches of listing rules, including share issuances to related parties of a director. Doesn't sound that good so far. So the market operator, the ASX, noted an entity called Shelf Pty Limited, which was linked to former director Salvatore Vallalonga, had participated in a recent capital raising announced on the same day as the Hum joint venture. So for those of you who don't know, DOU has teamed up with Hum, seen as a pretty good business move, and consequently their share price went up. The 2 entities connected to the parents of the current director, Bert Mondello. So it looks like there's 2 directors involved. There's Salvatore and Bert. So what came next? So DOU complied with the demands to commission an independent review. So the ASX is doing a pretty serious look over of DOU, and they had an independent party come and review the actions of the company. And they did find that one entity of the company had received shares, or sorry, not one entity of the company, just another company had received shares in breach of listing rule 10.11. That company is Tahirian Holdings. It was controlled by one of Mondello's parents. So I think, is that, yeah, one of the current director of DOU, one of his parents owns this company, Tahirian Holdings, and made an estimated $150,000 profit after tax in the week after DOU listed, following a rapid rise in its share price. So the independent reviewer concluded the issuance to Tyrion had been an administrative oversight, and the DOU stated the ASX inquiries into the matter are ongoing. So not super good news. Not super good news for DOU. It sounds like one of their directors has got another company on the ASX which has benefited from the rise in DOU's price, and that's not a good sign. So it's troubling. The investigation's ongoing, so we'll keep touching on this in future live streams. But yeah, definitely concerning times if you're a DOU investor. What does it mean for the company as a whole? Probably not too much, but if one of their directors has been found to be doing the wrong thing, certainly could have an impact on the share price. Good evening, BC. See if I can put that comment up. Could you give us a little rundown of your background, how you got into investing, how long you've been doing it for, and what you do for work? Yep, absolutely. What I'll do, I'll probably finish going through the next two companies, and then I'll get to that question. So moving on, I'll just pull up. The next company was RCE Pharma. I think that's how you say it. Had a brief look into this company to see what they're all about, what sort of financial position they're in. So they're not profitable, which is okay. They're a growth company. We'll get to it, but they've got a pretty good showing of products. However, with the cash they do have available, they've got good debt coverage, and they continue to issue shares. Not unusual again. You'd expect that from a growth company. The community ownership. This is an extract from my broker's website, SelfWealth, and it tells you how many people own the company and then sort of their performance. So the top 1% of performers on the share trading platform SelfWealth, that's the majority ownership. So that might tell you a few things. I think it's always interesting to see that community ownership spread. Pretty interesting. There's quite a lot of people who are backing them in. So maybe they know something that I don't, but yeah, certainly a positive sign. Over the page, the other things I really like about RCE is the fact that they've got founder ownership. So you can see up on the major shareholders chart in the top right, G&O Melrose, who in that little star, if you read their investor presentation, tells you they're the founders, own 23% of the company, which is really good. It means they are still in a position to make strong decisions based on the company's direction. So that's a positive. And then a small snippet which sort of tells you where they're at in their development. So they're for two products. The intravenous administration of one of their antibiotics, and topical as well. They're in phase 1, 2, 3, and 4, which is the efficacy testing stage, or safety and efficacy testing. So they're reasonably well progressed. It doesn't, I guess, phase 4 for the intravenous one, that's positive, but as we get closer to that regulatory submission, that's when things get interesting. We saw how Mesoblast has fared with that. They've had a couple of products which have gotten to that submission stage and they've fallen over. So positive, but Mesoblast, the nature of their products are based on not questionable medicine, but it's sort of stem cell based, is not widely proven effective, whereas this company is focusing on synthetic antibiotics, which they have proven are effective. So probably a little bit stronger in confidence about these guys. The next company was Vulcan Energy. Again, not profitable and really similar to Talga in their setup. So they're focused on lithium, copper and zinc, and they've chosen to mine in Norway. And again, I've put up the community ownership and we can see that the quite a strong top 3% or top 1% is holding 3% of the stock. So again, a positive sign. Vulcan is focusing on their mining operations and processing of lithium as a zero carbon venture. So this is their thing that sets them apart from potentially other miners. So if you buy lithium through Vulcan, it's net zero emissions. And that's a huge selling point because we all know EVs require lithium, and EVs are seen to be green and good for the planet, but the back end in producing enough batteries for a lithium company, or for a lithium car or a battery powered lithium car, the emissions are huge along the way, whether creating the battery, mining the lithium, mining the graphite, then all the steel that goes into the car. The end product has a huge, what they call an embodied energy. It means that the carbon produced to create the vehicle is actually quite large, and so Vulcan is providing a way to reduce that embodied energy. And I think it's a really, really good business model. So it'd be interesting to see what happens. They sort of show why they chose that Norway location, and it's got to do with the concentration of lithium. It's very high concentration. But the other really key fact, you can see that number 1 point is the renewable heat. So this is how they do this with net zero emissions. They're using renewable energy to mine and process the product. And you can see here's their timeline. There is quite a lot of time until they see commercial growth. We're talking 4 years. So positive, looks really good, lots of hurdles to overcome. Definitely one to keep an eye on. Could be worth, obviously do your own research. This is not advice of any kind, but could be worth a small investment just to see how it goes, but keep your expectations in check because anything can happen. So they're the three companies that came up last time. I thought they were worth talking about, and they might even be worth a full video in the future. But yeah, I hope that was useful to you for all those who questioned about those companies. BC, okay, yeah, I'll give you a little rundown of me and my background. So how I got into investing. Pretty much I was saving money in my bank account, and I was using Westpac for banking at the time. Don't use them anymore, but at the bottom of the banking app, I think it had an option, I'm not sure what it was called, but it was a link to a company called BT Invest. I'll bring that up, see if they're still, I'm sure they're still around. BT Investing. Yeah, so BT is essentially a financial funds manager, and they offer managed funds. I'm not sure if you can buy them on the ASX, but what Westpac enabled you to do is really easily click on that and then link up and start a portfolio on BT. And like your super fund, you can choose levels of growth based on the risk, and it's pretty much a managed fund, and the fees are really high. But I had no idea, so I chose one of those plans, started putting some money in it, and the returns were decent for a while, and then it sort of slumped. But it really wasn't that successful. But then I discovered on the BT platform, I'm not sure if they will give us any information on it, but you can build your wealth. But on BT, it actually allows you to choose individual stocks. Now, you're a beneficiary, so you don't actually own them, but they've got a pretty good system and platform, but there's fees, a bit messy. Anyway, I was watching a channel at the time, which is now called New Money with Brandon. What was his channel called? I've forgotten. He's done well with his rebrand, but Aussie Wealth Creation, that's it. And he had just started. He might have been on, I don't know, 100 subscribers, 200, and thought his videos were pretty interesting. Was watching along. He gave some recommendations on some stocks, and I invested in those, not knowing too much better. He said, cannabis stocks could be really great, like AC8, those kinds of things, and then also lithium, Pilbara Materials, Galaxy Resources. Put money in those, and almost every holding I had just absolutely tanked. It was horrible, lost heaps. The recommendation he gave, his biggest recommendation at the time was for Retail Food Group. See if I can pull them up. Retail Food Group. Yeah. If you look at their 5 years, sort of bought them, must have bought them in 2016, and it looked okay, and then it started to slide, and he must have made his video somewhere around here, and it was just as Amazon was coming into Australia, and they said Amazon will be doing food delivery service in Australia. I haven't seen much of that yet, but he said, look, food stocks are taking a hit, and I think that was at that time, Retail Food Groups was going on this downhill spiral, and he said, look, it's all good. I don't think there's going to be a big impact. So, Retail Food Group could be a good investment still. And then I purchased them, back here, and it slid, and then it absolutely tanked. So what happened here was Retail Food Group has a lot of franchises, Donut King, Brumbies, Gloria Jeans, and I think a lot of the franchisees came out and said how unfairly they were being treated by Retail Food Group, and the stock just crashed. So that was it for me. Got out of BT and then started looking around for more information and started reading up on the stock market a little bit more. And then over time, started investing and finally got some good returns out of companies that I invested in, not just off advice, but by actually doing some research into them. So that's the story. How long I've been doing it for? So that's 2017. So that's 4 years since I started BT, and then may have dabbled in some other managed funds prior to then. So you could say, 5-6 years, which compared to someone like Warren Buffett isn't long, but we're all learning together, I think, and the important part is making your own decisions based on fundamentals of a company and not just jumping on a hype train of speculation. So that's what I believe in, I think. What I do for work, work in construction, so commercial construction, delivering a wide range of projects, which is really fun. It's a great job, but a hard job at the same time. Lots of pressure, stress, long hours, but investing certainly a passion on the side. So I thought I'd get this channel going, and I've been enjoying it so far. I hope you've been enjoying the content. Cool. So Zamazu has asked, are you a holder of Appen? I was very close to buying Appen not too long ago. I was just waiting for their price to come down a little bit because I thought it was a bit dear, and then they slid. They've actually slid off a cliff since then. So I've been waiting for that to stabilize, but the reason it slid, I don't fully understand. I need to do a bit of research. Sorry, it's not APT. Here's Appen. So it's been recovering. Oh, no, it hasn't. There's the 1 year. I was sort of saw the COVID and I thought that would have been a great price to get it at. Not far away now, but I really need to do some research into why it slid. I've just been watching it slide, hoping it stabilized, but I should, current valuation, I think definitely looking better. If it gets under 20, it's probably a buy, but I need to understand first why it's sliding. I remember reading something to do with the demand for what it was their earnings forecast. They dropped for some reason. Should you buy the Appen price dip? What's been impacting the price? Q4 performance disrupted. Yep. Okay. That's not a big deal. Major clients reprioritizing resources towards new product areas. So it looks like their clients are not purchasing their product as much, but artificial intelligence grows rapidly. So essentially Appen provides data so that AI can learn, whether it's, you know, footage of like driving down a road, so you can teach a self-driving car how to drive before it actually gets on the road. So yeah, I think the long-term prospects are good, but I really need to read into which one of their customers is pulling up from spending, and realize, or try to figure out why that is. Maybe they're going to a competitor, I don't know, but yeah, it's certainly getting to the point where it's looking like good value. So I should do a video on Appen, really, because I think they're a good company. Pat, how you going, Pat? I'm just starting out in buying shares and was wondering on your views on purchasing shares under $1 when starting out, things to avoid. Aiming for a portfolio of 500. Yeah. So the value of the share doesn't really mean anything. Just because CSL is $280 and Appen's 20, it has, you know, no meaning on which company's more better or worse. It's to do with their market cap. So the total market cap of a stock is the amount of shares outstanding multiplied by their share price. So if you had a share that's $1, but there was a billion shares, that's $1 billion company. But if you had a company where the share price was $1 billion and one share, those companies are the same value. So I wouldn't worry about, you know, how much the share is. If you think it's a great company and it's $1,000 per share, and you can only buy 5 shares, well, that's fine. You know, but that's why companies do stock splits, to make it more affordable. Like PushPay did one recently. They were $9 and they maybe a bit less, $8, and they did a stock split, and that means they double the amount of shares and each share halves in value. So if you owned, like I do, a share of PushPay, you now own double the amount of shares and they're worth half as much, and they do that to make it more accessible to people to buy. So starting out, things to avoid. I would avoid investing in companies that you don't understand. Yeah, maybe you work, I'm not sure what industry you work in. If you do work in a particular industry, it's likely you'll understand the companies in that industry best. For me, working in construction, it turns out that a lot of construction companies run on really low margins, and that makes them really not worthy of investing in. A great company is earning a 20% margin. A great construction company is earning a 3% margin. However, I do have an investment in Downer EDI, and that's been going really well. I'll pull up Downer. And I like Downer because I thought their fundamentals were really strong, and it's been doing really well since I bought them. You can see the year has been slow but steady. You know, I think I bought them back here somewhere at $4, and now they're $5, which is not a bad return. What is that in 4 divided by 5? Yeah, 20% return. Great. It's not doing any vertical movement like a BrainChip or an Afterpay, but it's a solid company, and the real reason why I think Downer has a positive future is Downer does a lot of electrical civil works, which is infrastructure projects. So you're looking at in Melbourne, the Westgate Tunnel, or the Sydney Metro, likely Downer's doing the electrical works. And we know the government is spending a lot of money on infrastructure in order to boost the economy. And if these projects come up, Downer will profit. Simple as that. So I think for the near to medium term, they're a good pick. I like Downer. So don't expect to double your money quickly, but 20% in a couple of months, that's pretty good. And you don't really hear about it. So that's my advice. Let me know what you do, what industry you're in another comment, and I'll have a chat about that. Thanks, BC. Can I look into CHK, IRS, and a few of the mines, also IMU? Okay. CHK, yep, we'll do that first. Bear with me. I haven't heard any of those companies off the top of my head, but yeah. Koiba Minerals. Okay. Yep. Small market cap, 60 mil. interesting. I'll have to bank that one and have a look later. IRS. Might be delisted IRS. Is it IRE maybe? BC? Let me know. Yeah, and IMU. Okay, a bit bigger. Yeah. What do they do? Biotech. Like biotech. I think it's a great space. Leading product is a vaccine, a cancer vaccine. Very interesting. Okay, cool. Yeah, that's maybe one I'll look at, and I'll put that on the list for the next live stream, and I'll talk about those companies or that company as a first start in the live stream next week. Give me some time to do some research, but yeah, looks good. The other two, probably a little bit too small. Just that market cap's a bit low. Doesn't mean they're not good companies, but if they grow a bit, happy to look at them. But yeah, 500 mil is a good starting point, but anything under 100 mil is really a penny stock, and they have their merit, but it's probably not something I'm super interested in. So we'll bank that, and maybe when they grow a bit, we'll check them out. King Korean just joined. You've missed a couple of your companies. I went over a few at the start of the video, so obviously this live stream will go up afterwards. You can check that out. But yeah, I went over RCE, Vulcan, and who's the other one? Let me have a look. DOU. Yeah, an update on DOU. So went through a few slides. You can catch up after. All good. Yeah, your next comment. Vulcan, RCE, and Polynovo. Haven't discussed Polynovo. Let's do that now. Let's have a look. Polynovo. So yeah, did a video on Polynovo a little while ago. Wow, 9% drop. Okay, let's have a look at the news. Sales increase, that's good. Okay, here, Motley Fool, always got your back. Let's see what they're saying. Could be a good buy-in opportunity. 31% sales increase, which is good. 41% in the US, very good. Hiring new staff. So what's going on? Must be below expectations. Near term's volatile, positive on the long term. That's really interesting because there doesn't seem to be any, really bad news. So a growth rate of 31% is excellent. So 41 in the US, which is probably the biggest market for their products. And he talks about here, surgeons recommending the NovaSorb product to their peers. It's probably similar to Cochlear. If you have a look at Cochlear, massive blue chip ASX growth stock, they've been hit hard. Look at this. 1 year, and this is all to do with elective surgery. Same with Polynovo. In burns victims or in people who have hard of hearing, who need cochlear implants, a lot of this is elective surgery. It's not seen or deemed necessary to survive. And at the moment, as you would know, in Australia, we went through a period where elective surgeries were pretty much put on hold, just so that we had enough spare bed capacity in case COVID levels spiked. And we know that here in Australia, we're doing really well, and we might forget that COVID is not as much of a problem here anymore, but everywhere else in the world, it's really heating up now. They're not doing any better than they were in March, April last year. So, and Cochlear, a lot of exports to China, and I'm sure Polynovo, they've talked about the US. The US is in no good state at the moment. So look, the way I see that, watch that price, because Polynovo, I've been waiting for an entry point. I think they're a good company, great fundamentals. Wow, look at that. Yeah, wait till this fizzles out, and then I'll do a bit of a review, but I certainly think they could be a great company going into the future. I mean, they've got a functional product that's out on the market that surgeons like and they use, and it provides great benefit to patients, and they've got more in the pipeline. Really nothing bad to say about them. So I should have a look into their quarterly results and maybe do an update video on Polynovo. They're a great company. Zamasu, yes, I did discuss Vulcan. Sorry, King Karen, you're going to have to watch that later, my friend. Zamasu, are you interested in Goodman or Bingo? Yeah, so Goodman, I do own Goodman, and it's been doing well. It's been solid. Essentially, Goodman, they develop and construct. They don't construct them. They probably engage a builder to construct them, but they are in the business of warehouse development. They're a REIT, so a retail investment trust. Gee, forgotten what REIT means. Goodness me. Let's have a look. Real estate investment trust. Thank you, Google. So back to Goodman. They're a real estate investment trust. So other ones on the market are something like Vicinity Centres. Whereas Vicinity focuses on shopping centres, which have seen a massive hit, and Vicinity is, the poor stock has taken a huge beating. Goodman has been performing well, nothing extreme, but they've had a solid, 6 months. It's not too bad. But if you look at their long-term spectrum, it's a really nice linear progression. If you bought back in 2019, you've essentially doubled your money. That's a great 2-year return. So the key factor that made me invest in Goodman was their deal with Amazon. Amazon does not develop or construct any of their own warehouses anywhere around the world. They always engage someone to do it. And I've used Amazon in Australia, and I think Amazon's great. I think it's a good service, and I think it's only going to continue to grow. And as it grows, Goodman will profit. So that's why I like them. And their fundamentals check out. They're a really well-run company. They've been going for a long time. Good business. So that's why I like Goodman. Bingo. Yeah, Bingo is interesting. So being in construction, I know Bingo. Know Bingo well. A number of years ago, there used to be a multitude of different bin companies. Essentially, Bingo provides those massive construction bins, the steel bins, 12 meters long, and they pick them up, drop them off, and do waste processing. There was a company called Construct who did bins. They were probably the biggest. There was a company called DATS, D-A-T-S, that did bins, and they were pretty good as well. And there was a bit of competition for construction bins. And then Bingo, whoever they are, came in and they bought all of these bin companies, and they pretty much just wiped the market clean and set the prices up, and then everybody had to use Bingo bins. Now there's a few smaller players coming up, like Ascot bins, Rhino bins. There's a few here and there, but if you look at any major infrastructure project, the Skyrail through Melbourne, Westgate Tunnel, you'll see Bingo bins everywhere. They're essentially what you have to use at that top level. So, but their performance has been, not that good. So let's have a look. Bingo Industries, BIN. Not a very attractive ticker code. Yeah, that's it. So they've been around since 2017. It's probably when I first saw them, and they've been sliding sideways ever since. I don't know what their margins would be, but it's probably pretty low. Not something that interests me a lot. It's what I would call a cyclical stock. So when construction's doing well, Bingo will do well. Pretty much it. They don't have much control of the environment that they work in. They can't innovate and develop a new product. So yeah, it's a pretty, just adjust this a little. Yeah, it's a bit, not my favorite type of stock because it relies on a price cycle. Same with someone like BHP. BHP or Rio Tinto, for example, a great company, huge returns. I remember looking at Rio not too long ago at a price of like $90, and I thought, it's too expensive. But it goes in these cycles, and that follows the iron ore price cycle. And at the moment, iron ore is at the most expensive it's been since the GFC. So, go figure. If the iron ore price drops tomorrow, Rio Tinto goes in the bin. BHP is less diversified than Rio, and they suffer more from the cycle. So you can see that really clearly there, which means you can get them at a bargain, and they provide a really good dividend. So, yeah. BC LRS, pull that up quickly. Latin Resources, yeah, really small again. I might just skip over that one. Apologize. It's not that I don't believe it's a good company. It's just that market cap's a little bit too small at 38 mil. It's probably more of a penny stock, but certainly if it grows, happy to take a look. Pat, thanks mate. Currently working in IT for a KiwiSaver company, but more interested in future materials and resources. Yep, definitely. I think, especially on the ASX, Australia is full of resources. So if you're not invested in miners in this country, you're probably missing out, whether it's on great dividends or some good growth from speculation in gold. Another reason why I'm very close to purchasing Northern Star. When I do, I'll make a video and explain exactly why, probably in this format, and just go through all the reasons. But yeah, good direction, I think, for investment. Don't limit yourself to a sector, but yeah, I mean, you work in IT, huge opportunity there as well. There's no shortage of Australian companies that have done really well in the IT space. I've done a video on Megaport, really like them. NextDC, they're both sort of data server companies. And then more recently, I did a video on Dicker Data, and I really like that company too. If their share price comes down at all, I'll certainly look to snap them up. They've got the founders running it with huge ownership of the company, and they provide what seems like a pretty basic service. Essentially, it's selling computers, network gear to customers, then getting them set up on the cloud, and then helping them maintain that relationship. But they also offer finance and all kinds of things. But their financial performance is excellent. Go and watch that video on Dicker Data. Maybe leave a comment, because I'd love to know your thoughts, being someone who works in the industry. Maybe you've heard of them, I don't know. But yeah, love to hear from you, Pat. So thanks for leaving a comment. Krez, picked up some Polynova today. Yeah, I'm going to wait for it to bottom out, I think. Yeah, certainly getting them at a huge discount at the moment. So did you see any reason why there was that price drop was warranted? Or yeah, I'd love to know your thoughts. Drop a comment. But yeah, so that seems to be all the comments coming through tonight. If you've got any more questions, put them through now. Like an auction, going, gone. That's almost it. So thank you so much for joining this live stream. Really appreciate you coming along, asking the questions. It's been really fun again. If you got any suggestions for next time, maybe what things you'd like to see, or yeah, anything along those lines, please, yeah, drop a comment and let me know. So no, I think that's it. Thanks very much, everyone. I'll catch you in the next video. Cheers.